transitioning from working in finance to entrepreneurship is never a straight line, and mine certainly wasn't either.
Permanent question all the time. What is better, Excel or Google Sheets? So what do you think about that?
The EQ skills, right? So your leadership skills and your people skills are much more important today than they used to be.
What is the best time or maybe criteria to make first financial model?
And then I'm sitting there with my Excel sheet and saying, okay, what does my business case, what does my financial plan look like?
That's a good point and recommendation that can be used in different spheres.
Sales leaders are always too optimistic. The most realistic numbers for your next year is going to be the budget from last year.
So, hi and welcome to Fuel Podcast. At Fuel, we make finance fun and help founders avoid their financial mistakes. And today, our guest is Anders, who is one of the well-known voices in FP&A. He is also founder and co-founder and the partner at the Business Partnering Institute. So welcome, Anders, and I'm happy to have you here. And I'm waiting to discuss with you all FP&A secrets today. So happy to have you.
I'll try to spill as many as I can, Alyona, and thanks a lot for inviting me. It's always a pleasure to be here, share my thoughts, and hopefully add a bit of value to the audience.
Great. So let me start from the first question. So I am always curious. So I like your content on LinkedIn, and every post is very valuable. And I'm just curious, like, how is it possible to publish so valuable content every day? What is your secrets? And where do you find these ideas for this post?
The partners I work with at BPI and other people as well, they also kind of ask the same questions, right? Because I've been at the content game since 2012, probably longer than most, right? Especially in the finance and FP&A space. You know, you live in an ever-changing world, and you meet people with new stories, you know, most days. And while of course you can't come up with your own stories to tell new stories every single day, you can definitely relate those of others. And then simply knowing the general challenges that the audience is facing really helps to put out new content. And of course, you know, content gets repurposed, reused, and so on. So it's not like every single post is 100% fresh. But you know, you can just deep dive on all these topics, and you can always say, okay, well, you know, let's explore 10 ideas with an overall topic. Then let's explore 10 ideas under the 10 ideas. And then let's, you know, so the content multiplies really, really fast. I guess the core of it is really just knowing the daily challenges of the audience. If you do that, then you can just talk about that every single day.
Yeah, that's true. But do you have any specific day to write content? So
no, it's pretty free flow right now. We have started to contract maybe a bit of virtual assistants and so on to help out, so that I can focus on other parts. We also did take in some ghostwriters for the blog a few years back. So while I'm still sort of pulling the strings and coming up with most of the ideas for the content, some might be written by others, but of course still on my channels.
Talking about your role, so you already mentioned a little bit that you're also like somehow responsible, as I remember, for marketing in your company.
Yeah.
And that's the interesting question. So I always have, you know, like this thoughts about like, I also have financial background. Now I'm a CEO, and it's always interesting to see how financial people use their mindset in their like new roles. So what do you think about the change of your role? So how financial background, for example, helps you with marketing parts, or how do you analyze budgets, financial figures in your company now, where you're already a co-founder, not just like a CFO?
Yeah, so I don't need to work a lot with financials in my role at BPI, but I mean, I do short-term contract roles where I actually need to go out and roll up my sleeves and do some real work. And I think that's really important for the storytelling of everything that we do. It's really important for me to be able to teach our consultants how to do things, coming up with concrete, tangible, you know, it's not just 5 years ago I did this. No, it's actually yesterday I did this. I think that's really important. But what I found transitioning from working in finance to entrepreneurship, I think most entrepreneurship journeys they're kind of like, it's never a straight line, and mine certainly wasn't either. And today, being primarily responsible for sales and marketing, I would have never ever thought that I would end up there, especially not the sales part, I guess. But what I worked with in the latter part of my corporate career was really all about building relationships, getting to know new business areas, understanding how do we create value in those areas. And what I found translating into entrepreneurship, and of course, sales is not the same everywhere, but it was just as much about building the relationships, so that it came much more natural than what I would have thought. And of course, what helped there was being a knowledge expert in our domain, right? So I think we're second to none globally in our field, and that also gives you a lot of grounding when you're sitting with potential clients. And you don't want to be the expert when you're there per se, right? You want to have a relational conversation, but being able to sort of pull out those stories and pull out those examples and talk about what other companies is doing, that helps a lot to do the transitioning. So because we're talking about what I used to work as, there's just really a good match between the skills I have developed and what I used to do.
Yeah, and I think in sales marketing, so it's always about analytics, about data, and I think you are great with that.
Yeah, I don't do so much analysis really. It's more so I guess on LinkedIn, of course, it generates some data, but I don't sit and crunch it and really feel, okay, what should I be doing next? It's kind of like over the years, you could just get used to understanding. If you just see a flow of data points, like let's just say I wanted to analyze the performance of my post for the past couple of weeks, just simply scrolling and just seeing the view count, or the impression count as it's called today on LinkedIn, it just instantly tells me, okay, something is not working here, or hey, it's going well. I don't need to necessarily analyze a lot of data to get there. Our sales pipeline, I think we have set up a system where we can easily see what's moving up and down. So could we benefit from doing more analysis? Probably so, but it kind of works out. So my mindset is much more 80-20 than it's the 99% mindset that you would often find with finance professionals.
Yeah, that's right. I think that's a good point and recommendation that can be used in different spheres and also like for early stage startups. So I actually like do the same. So I don't like, for example, build very complicated financial model for us now because there is no need in that. So I use like very easy one without 100 different assumptions. So yeah, that's totally true. And you can see all insights much faster. What do you think about, you already mentioned a little bit about the skills that like communication skills that you have from your CFO background and also analytical skills. And I saw your last post about CFO types, about 8 CFO types.
Yep.
And that's interesting, like to discuss what do you think about the skills? What are the most appropriate skills for now and maybe for the future? For financial leaders, what do you think? What is the most important to develop?
Yeah, so I think traditionally we've probably thought that the, let's call it IQ skills, right, and analysis and business understanding were the skills to have. And I'm not saying that they are not important, but the EQ skills, right, so your leadership skills and your people skills are much more important today than they used to be. And of course, the whole technology and AI wave that we're seeing at increasing force is just emphasizing that a lot more. So it's really developing those human EQ skills that is going to set you apart in the future. And under that, you also have, communication, influencing skills, building relationships, just like I used to do, and I also do in doing sales, of course. And then the leadership part, which I think for all functions in a company, is not just finance, could definitely use an upgrade. So that's what's going to set you apart. You would probably often see like statements on social media, for instance, like the technical skills are what got you the job, and the soft skills are what got you promoted, right? So I think that saying is very much true, but it just gets more and more amplified by the trends that we see in general in business and also in the finance function.
What do you mean by like technical skills? So is it about skills of working with different software, I don't know, automation, or maybe, I don't know, building regression models, no
Well,
SQL. So what is it level?
it could be. It's probably a bit too technical, but we do say, for instance, data analytics is part of that. And that could be, that could be building databases or, using the, more sophisticated tools and whatnot. So it's definitely a part of it. But it's just as much problem solving, right? So having a structured way of doing that, and project management, right? So if you want to be a value creating finance professional, you can't just stop your work once you have sent an email with a report, or even if you've been in a meeting and presented and a decision is made, you don't stop there. You have to take charge of ensuring that the decision gets executed and the desired results are there. And oftentimes, people are looking for someone to facilitate that process. So I'm not saying you need to be, a lean expert or a Prince2 certified, anything like that, but you need to know some sort of basic project management framework so you can help the people that are executing actually progress and get the desired results. So those are some technical skills that we would recommend. And of course, you have your finance and accounting foundation that you build everything on.
Yeah, that's true. And like you already mentioned AI parts. What do you think about AI parts? So will it help financial leaders, or will it like can also replace some financial roles in financial management? What do you think?
Yeah, I mean, we've seen the statistics for a long time that I think it's like auditors are bookkeepers. So the more some of the bookkeepers are basic, auditing is not necessarily basic, but let's say they're like, I think it was PwC published some 5-7 years ago a report that said they were at 98% risk of being automated. And you think about auditing and you think about what large language models can do today and other AI tools, you should expect that you can plug in these tools on the data in a company. They can analyze everything to the point where you basically just have an audit partner sitting with the CFO discussing, okay, so this is what we're looking at, rather than having, 10 junior staff with, 0 to 1 years of experience plowing through all sorts of documents and Excel files that you've definitely seen a lot of audit teams do, right? So I think that's a clear example of where AI could definitely take away a lot of jobs. But I also keep referring to statistics that show that yes, it's going to eliminate a lot of jobs. So I don't know what the geographical scope of this survey was, but it said that 70 million jobs were going to go away, but 90 million jobs are going to be created. So it's a net job add. And I think we've seen that throughout all the industrial revolutions during time, that it's a net job add. But what we've also seen, of course, is that we need different skills to succeed in that role. And that's where the EQ skills become a lot more important, because we have to sit there and discuss, okay, so AI tells us that this is the best option.
Yeah.
Okay, so do we have the capabilities to execute that? Do we have the capacity to get it done? So there's lots of discussions to have we had, make a decision, and then okay, AI can probably analyze if you get the results in, but you want to detect as early as possible if you're getting progress. You want to have someone that's driving that process. AI is not going to drive the process, at least not yet. So there's lots of things for humans, for finance leaders to do in that process. But yeah, it's you gotta develop, you gotta stay moving. Otherwise, of course, technology will catch up with you.
That's true, but I think that the funniest thing here that it's still the companies like use Excel or Google Sheets.
Yep.
So we are still here. So we talk about AI and all different automation, but we are still use Excel and Google Sheets. So and I think that's like permanent question all the time. What is better, Excel or Google Sheets? So, what do you think about that? So, I don't think that somebody already asked you that on the podcast, but I thought it
Well,
would be interesting to discuss with you.
so I guess there's two perspectives on it, right? Because I've also asked my audience this question, and I think that 93% said they preferred Excel.
Oh,
And it's also what most companies are using. We have one client, I think, where they're 100% Google driven, but most clients, they are definitely Microsoft driven in one way or the other. And of course, then as a standard, you get Excel. And if you are brought up in an Excel environment, you have to have really strong arguments to switch to Sheets, right? And I think, Sheets probably has better collaboration abilities, but in terms of building financial models and running your company on them, um, and again, I haven't used Google Sheets too much, right? But then I'd always default to Excel.
Yeah, just like I want also to add to this perspective. So I was a fan of Excel as PwC auditor when I was PwC auditor, but I think during last several years, I don't know like with what companies, maybe you can clarify with what company you work. So we work mainly with startups. So like early stage startups, they are most of them. So they use Google Sheets. And I think, yeah, it's much faster. But what I see, like bigger companies, especially like, I don't know, maybe more enterprise level, so they mostly use Microsoft Excel. But yeah, it's still interesting question because like with Google Sheets, it's more about collaboration and maybe some integrations. But why do you think, for example, Excel might be better? So in what cases?
I think it's simply, of course, there's some legacy to it, right? But older legacy system like Lotus 1, 2, 3, I mean, they have of course been replaced, so it's not impossible to replace a product like Excel, of course. But the 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 force that Microsoft is putting behind this product, the integration to you know just the standard way of working in companies with you get your Microsoft Office stuff installed and then you are there, right? If you're an early stage startup, maybe it's easier just to go on Google and use that,
And
so maybe
choose.
the barrier to entry is lower. But I'd say Microsoft invests heavily in Excel as a product. I don't know how much Google invests in Google Sheets. I doubt as much as Microsoft invests in Excel.
Yeah.
So it's just, I mean, it's kind of like if you look at the BI landscape, right? So you have Power BI as well. It's at least from a visual standpoint, it's an inferior product to many of the other visualization tools you have out there. But because of the integration with Excel and Microsoft and everything else, and it just comes in a free version and it's easy to start using it, it's just unbeatable almost, right? And if you ask, I'll also ask the audience, do you prefer Power BI, Tableau, or whatever? And I think 60% almost say Power BI, right? Not necessarily because of visualization, but because of the ease of use. Um,
Yes.
so it's hard to beat ease of use. I don't say Google Sheet is not easy to use, but it's just not. It just doesn't come as easy to you if you have, I have a Surface laptop here, and we have the Office 365, and then there's Excel. So the barrier for me to start using Excel is just much lower than if I had to use Google Sheets.
Yeah, that's true. And what about, let's talk a little bit about FP&A. So how you can explain what is FP&A maybe for founders who will listen us and maybe will hear about that first time. How do you explain FP&A and maybe why companies, businesses, I don't know, startups need FP&A?
Yeah, I mean, so of course we can look at the name, right? Financial planning and analysis. So if we start with the financial planning, it's about budgeting, it's about forecasting, and really taking a look into the future to plan your company activities. Now, planning can take place in other places than finance. You can have sales operations planning, you can have marketing planning, but the financial planning is sort of where it all comes together, and is what you typically then show to your board or to your investors or whatever it might be. And typically, of course, it might just be the founder that's doing a bit of Excel sheets, or they get some, I don't know, an auditor or whatever to put something together for them. But you always need that financial model that can showcase the financials of the company and project into the future if you want to get funding, or if you just need to put a business case together, right? So that's the financial planning part. Then you have the analysis, and I would split the analysis probably into two: analysis of your actual numbers versus then your budgeted and forecasted numbers, right? So how are we actually performing versus the plan? So that's a kind of like standard performance management cycle that you would run probably every month. You would look at this, and then there's the more ad hoc cost benefit analysis where you might be looking at, how can we increase our profit margin through a different sales mix, or look into how can we save some cost on negotiation with vendors, all sorts of things that you can analyze and try to come up with insights. I think that in basic terms is what FP&A can do. And in most companies, that's what it is. What I want FP&A to do is then to maybe take a more strategic role in the company and say, okay, if we're looking 5 years ahead, for instance, which we sometimes would do, that's our strategic planning horizon. So in FP&A, I wouldn't just be putting numbers out there. I'll be having that business discussion with the CEO or whoever is relevant in this context to say, okay, what are our choices we can make as a company? What do they look like from a qualified perspective, a quantified perspective? And so together be part of actually making those choices. Today, many FP&A teams are not necessarily in these conversations. They're just doing the standard planning analysis, but they should.
Yeah, that's a good point about involvement in strategic part, and also about this part, like some type of financial modeling. So, and what do you think? What is the best time or maybe criteria to make first financial model or to make first financial plan?
I think when you even just think about starting a company, you would make a business case. Why would you start this company in the first place? And it might not be very sophisticated. It might just be a simple, column, 2-3 columns in Excel or Google Sheets, where you list activities and expected revenue and then actions to take. But that's a financial plan. When I clearly remember this moment in time when I had made the decision to leave corporate and go full time into entrepreneurship, and I was sitting in the Schiphol airport in Amsterdam. I had just been on a trip to Singapore and Shanghai to do some training of internal people, and I come back there and I'm sitting. It's probably 5:30 a.m. in the morning while I'm waiting for the flight to Copenhagen. I'm having a muffin and coffee in Starbucks, and then I'm sitting there with my Excel sheet and saying, okay, what does my business case, what does my financial plan look like for the first year starting up in my own company, you can say. And that's a financial plan, right? That that's what it is. And you need that when you have the thirst for of should I actually do this? Because you cannot
Yeah.
put that plan together. You are just basing it on hopes and wild guesses. And by all means, maybe some founders they do that, but I'm biased here, of course, as well. But I would like to have at least a simple business case or model to start up with.
How was correct your this first financial plan? Like we see actual, so I think this is a
Yeah,
question.
that's a great and interesting question because this was late 2019, and I left corporate end of January 2020. So my first day was 3rd of February 2020, and then of course the pandemic hits 3-4 weeks later, which means the whole foundation for my thinking around starting up and whatnot that was just gone. But then after summer holidays, companies come back and they're like, okay, this is now the new reality. We start making decisions again. So from in September, October, November, December, I pretty much made of course, in our relative size, a big sale every month. So from a sales perspective, I actually beat my plan. From a revenue perspective, not so much because a lot of the revenue would be delivered in 2021. But I think I pretty much delivered on the plan, especially considering the circumstances.
Yeah, that's always a question about this revenue, I think, prediction. And from your experience, and you have already sales and financial experience and both backgrounds. So, what do you think if it? I saw many cases, like for example, when companies just plan something and after that, I don't know, they achieve just like 50% of what was planned in their revenue. So, what would you recommend to such companies, to founders, how to make reliable financial plans for revenue?
You know what? I'm more of a sales leader today than a finance leader, right? And so, of course, I can see both sides to it. But speaking of facts, what I can say, sales leaders are always too optimistic. They're always too optimistic about what they can achieve. And I say that because we still haven't for a single year where we've actually had real financial plans. So not just my back of the envelope, but a true, let's call it a budget or sales plan. We're yet to hit that plan in a year. We're still growing very well, but we're just not hitting that plan. So we are too optimistic as sales leaders. And I think it's the role of finance and FP&A to come in and not to crush hopes and dreams, but to maybe speak with data to say, okay, hey, Anders, for the past 3 years, we haven't met our revenue target even one single time. What we can see in the financials is that we're always 25% below, just to say a number.
Yeah, yeah.
So in this scenario, tell me your best plan, and let's say the budget is going to be 75% of that. Then we have a realistic target that we all feel we can hit. Doesn't always work like that in corporate, of course, but sales leaders are always too optimistic.
That's true. We use exactly the same scenario. What you said, that we have plans from our sales team, and after that we just take average percentage for our baseline scenario of achieving that plan. So I think that's a good recommendation, just to manage your expenses, especially if you're like bootstrapping a profitable business and you need like to manage your expenses with your revenue part.
Yeah, and what I heard once this is from a senior partner in McKinsey, so I don't think he's too attuned to the startup stage anyway, but he basically said that the most realistic actual numbers for your next year is going to be the budget from last year. So if I want to talk about realistic sales, let's call it a revenue target for next year, it should actually be the revenue target we had for this year.
Yeah. Yeah.
Yeah, so that's a simple way to look at it.
Yeah, that's very interesting recommendation. I should check what was predicted for the previous year.
Yeah.
Definitely. What do you think about? So I understand that you also had this experience of being in crisis, as you mentioned with COVID. But actually, we also see that now is like financial downturn. And what would you recommend to founders or maybe to financial leaders? Like, what is the best way to manage finance during the crisis? And maybe some recommendations how to cut costs in a smart way if you need that.
I think what's key, and of course, depending on how big your company is, it might be a bit challenging if you're a startup with 5 people, right? But in terms of the resources that you have available, good word of advice is to have 20% of those that you can more easily move around. It doesn't mean that you should be sitting as idle cash in the bank, but you should have that list of projects or costs that you can say, okay, if we're in a crisis, or the other way around, if an amazing opportunity comes along, we can always reallocate 20% of our resources towards that. Or if you're in a big crisis, you can cut 20% of those resources, right? Because that gives you the flexibility you need. If you have no flexibility, it's really, really tough, right? So the best you can do is to give yourself flexibility, because in that way you're always prepared, whether it's good things that come along or it's challenging things that come along. But if you allocate 100% of your resources to departments and they tie that up into headcounts or development projects and whatnot, then what do you do if the crisis hit? Then you just have to really start cutting into this and work that's already being done and might be adding value, and it's sending the company typically into a negative spiral. So to really try to free up, maybe 20% is too ambitious, but have that mindset of having liquid resources available, so that you have that list to say, okay, this is what we do if something comes along, right? If you only start to plan for it when it happens, it's too late. It just is too
Yeah,
late.
you already have no time to the decisions. That's true.
You don't. And then you have to make much more drastic decisions that's going to destroy a lot more value.
Yeah. What do you see from your like you work with many companies? What do you see? Did they already make these decisions? So, or maybe they already did some actions like to be prepared for like financial downturn. So what do you see?
I think the reality is that most companies are reactive to this. So they act when something happens. And some of them, of course, might be more flexible so they can act faster. Rarely do you see a company that is proactively acting on a crisis, right? So, of course, no one can predict COVID like a black swan event, but the inflation crisis, which I think we're maybe coming a bit out of now, that was relatively predictable. Nothing is 100%, but relatively predictable. So you could have planned for that early on and say, okay, when prices start to increase, we want to be with some of the first companies out there increasing our prices. So we ensure we get the price increases. And we want to be sure that we are maybe cutting some ancillary spend that we don't really need. So we're in a good shape. Because if you are in a good shape, you can take advantage of the situation and pick up companies, for instance, that are in trouble, or pick up distressed assets, whatnot. So you can use your muscles or flex a little bit and get a lot of value out of it. But if you're not prepared, you're the one that's being muscled out of something, right?
Yeah, I also heard the very good recommendations about crisis from other startup founder. It's already not his first startup. He said very good thing that when you start something during the crisis, so it's a high probability that you will grow like very fast after crisis will end, because during the crisis you already tested different ideas and you already found your product market fit. So you
Yeah,
can grow much faster with growth of the market. So yeah, that's also a possibility.
it's so true. And looking back, it's what happened to us as well. It's not that we weren't necessarily growing before COVID, but it we I mean 2020 was a strange year for many. We still managed to grow with 25% that year, but we grew with around 200% the next year, right? So and it was just crazy days, but it was because we were ready. We knew the products we were offering to the market, and we had already been working, delivering them through the second half of 2020, just in a virtual setting. So we were ready to accelerate, and yeah, we were lucky. Maybe also there were no real competitors in our space, so it was easier. But it happened to us, and we're still kind of riding that wave, and it's yeah. Now we are going from startup to scale up this year, and of course that means a lot of other different things, but it's still all riding on that same wave that we had from 2021.
Congrats with scale stage.
Yeah,
I
thank
think
you.
that's also interesting. What do you think about hiring the first CFO or hiring the first FP&A leader for the company? So what would you recommend? So what are the best time to hire this person? Maybe some triggers where you can see, okay, this is the right time to hire this person to our team, or maybe, I don't know, some revenue level or some, I don't know, number of employees. So what do you think about that, and what would be your recommendation? So how to hire the first like financial leader, manager to your team? What is this person should be?
Yeah, it's a great question, and obviously, I guess something that every founder is asking themselves, right? Especially if they're not finance people. To me, it really comes down to the founder team or the leaders that you have already, and saying what is it that they do best, and would they be able to add even more value doing other things than also taking care of the financial planning. I'll give you an example, not from a, let's say, a CEO CFO relationship, but for myself, right? So when we really accelerated there in the beginning of 2021, I was still producing all of my content myself, which, for instance, meant that I had to write 2 blog posts every week. And while that is great from a marketing perspective and adding credibility, thought leadership, and everything else, comparing that to actually being out selling and delivering to clients, clearly we needed to do something differently, right? So we brought in help to create a lot of the content, so my time could be free to actually serving and selling to clients. So when you're at that tipping point, and revenue is many things to many companies, right? So it's probably difficult to put a number in, but it's more, how do you actually focus your time as a founder team? If you focus too much on the financials, or you're struggling to understand how you're doing financially, and it's maybe mentally or emotionally it's disturbing you, even though you might not be spending much time on it, that could be a good time, right? So for me, it's much more around make sure that as a founder team, you are doing what you do best and not being tied up in admin work or legal work or HR work, then get someone in that can help you with that. And I think the best way to do it, and that's a really it's a thriving field these days, right, is to get fractional help, right? So get that first level of, I don't know, maybe 10 hours per week from fractional CFOs, for instance, fractional FP&A people that can come in and deliver part of that service, and help you understand how can that create value in for your company. And then at some point, of course, the fractional needs to become full time if everything goes as you plan to. But it would be much easier to understand that trajectory if you get someone in part time from the beginning. And I think maybe 10 years ago, the fractional field wasn't so big. Today, I mean, you see fractional CFOs, FP&A people all over the place. So I think it's a great path for companies to take.
Yeah, yeah, I also see that, and I also see as like how founders describe the situation when it's definitely already 100% that they need someone when they start like to say something like that. Oh, I don't know, I can't sleep at night, so I'm thinking about like if you have enough money. So I started to be nervous, but I don't have time to calculate everything. So I'm just sitting at the office on the weekend in the end of the month and spend 2 days just like trying to collect all data. So yeah, that's definitely true. Thank you, Anders. I think that's all from my side. It was very interesting conversation, and thank you for sharing all these financial insights. And good luck with your scale, and we'll be waiting for all your next interesting content on LinkedIn.
Yeah, every day on LinkedIn, just go give me a follow, and you'll find it. It was a
Yeah,
pleasure.
we'll share the link. Thank you so much, Anders.
Thank you.